Good evening, ladies and gentlemen. Welcome to our weekly investor update. I'm your host, Dan Theok, Senior Vice President of Investment Banking. We're happy to bring you another investor update. Most of you will recognize Brandon Thomas, Investment Advisor, who's my co-host today. Welcome, Brandon.
Hey, Dan. Thank you.
Brandon will be presenting on Paramount Trading Limited, and I'll be presenting on Express Limited today. If you're a fan of the content, then don't forget to hit the bell to stay up to date with the channel. We upload content like this every week. Also, if you wish to embark on your very first investment journey, you should take that first step with Mayberry. Follow us on social media to learn more about how you can get started today. Okay, as promised, we'll now begin the first presentation on Paramount Trading Limited. Over to you, Brandon.
Thanks, Dan. So, Paramount Trading Limited, for those who don't know, is in the lubricants business, chemicals. They do a lot of, raw materials, asphalt, etc., etc. So that's the type of company that we're talking about today, and we'll be looking at their 6 months results as at November of 2022, and we see where revenue increased, by 55% from 770 million all the way up to 1.19 billion. We see where that has led to a net profit increase of 213% to 148 million. They have total assets, just over 1.9 billion. The net profitability led to an earnings per share of 10 cents. They're doing extremely well, coming out of the pandemic. We see where their current PE is roughly 12.2 times, which at this point, Paramount has ended their, or about to end their 10 years on the junior market. So we can look at them as a main market company now. And at 12.2 times, that's fairly valued, I would say. The price is roughly $2.19, as at close of yesterday. And, the reason why management said, for this growth, they mentioned that they have, focus, in terms of their growth strategy for digital transformation, manufacturing, construction, etc. Moving on to the next slide, we see where the quarterly profit movements, we see that jump coming out of the pandemic, that really nice increase in profitability, and they are maintaining a certain level above where they have normally been profitable, and that bodes well for the future of the company, and I'll speak a bit more to how that will look moving forward. Moving on to the next slide, we see the price movement, which has been, relatively stagnant, I would say, in the last year. Again, I'll speak to that a bit more. This is a stock that, since IPO went up to about $35 and did a 10-to-1 stock split, and has, been meandering in and around that $1 to $2 range thereabout. And we see where there's been an uptick in, coming out of the pandemic, but in the last year or so, it has remained, in the low twos region. So as I said, I want to speak to some positives for Paramount. In a recent interview, Mr. Graham, the principal, spoke to the fact that they will be focusing heavily on manufacturing. He believes this is a high growth area for them. And also he spoke to construction inputs. Construction, as we know in Jamaica, has been growing and will continue to grow moving forward. And PTL has a part to play in that. He also spoke to future developments where they could get into, certain type of building materials that are carbon neutral and can be much more safer for the environment. So they're poised to benefit from when we make that switch to certain building materials moving forward. He also spoke to the fact that they will be expanding capacity at their different manufacturing plants, where they want to go to even 24 hours a day in terms of their capacity. So they're really, trying to drive production, and therefore profits will follow. I must say, though, a concern would be that, or something, not necessarily a concern, but something to think about for investors, is that, as I mentioned before, that they are coming off of the tax break this year. So that would mean that they're going to be paying full tax at some point this year. And obviously, the way to mitigate against that then is to make more profits, right? Plain and simple. Also, another concern will be the liquidity of the stock. The volumes of trading, is not, very healthier to my liking. This is a stock that is very tightly held. 95% of the share capital is held in just the top 10 alone. So liquidity is low. So that is something, again, for would-be investors out there to consider when making a decision to invest into PTL. But I like the direction of where they're going as a company. And I do believe that profitability will consistently increase for years to come. Have any thoughts, Dan?
I do. Thanks for that, Brandon. I think it's a fair assessment. Now, I do want to remind us that this is a company that Mayberry listed 9 years ago. And I really have to give kudos to my really good friend Hugh Graham for what he's done with the company in the last 9 years. And let me give you perspective, folks. This company listed 9 years ago, raising only $75 million at $2.43. When you consider the stock split, that's effectively 24 cents. 9 years later, it's at $2.20. That's 9x in 9 years. This company had revenues of about $600 million. Revenues now 1.2 billion, so 2x in revenues. Total assets back then 222 million, now up to 1.9 billion, 8x. Profitability back then was about 50 million, now up to 150 million, 3x. So one thing I can tell you is Paramount knows how to grow the business, and that's not inflation driven. I mean, in the last 9 years, inflation's maybe 50, 60%. We're talking about 9 times your value in the stock price, 8 times the value in terms of total assets. Hugh has a background originally tied to haulage and construction, so I have no doubt that he will be able to transform the company and take advantage of what's happening in the construction sector. Paramount's also very well positioned in the chemical space, and so I think at $2.20, yes, I do think that's a fair value, but I think you have to think to yourself, can this company grow 5x in the next 5 years? Well, they've done 9x in 9 years. They've got good growth trajectory. There was good disruption during the pandemic, and I think they're back. They're looking really strong. Obviously, I have a bias. I've declared those conflicts, but I do think this is the type of company that has the potential to grow. You will not be able to buy $100 million worth of Paramount, but if you're the type of person looking to make a $5 million, $10 million investment, I think it's a good company to invest in for the long run. And I'm more focused, as we said before, about time in the market than timing the market. And here's a company that's demonstrated its ability to blow up its total asset base, its revenues, its profitability, and the stock price over the long run. So I see this as a great buy for the medium to long run.
Yes.
All right, well, thanks for that, Brandon. Okay, up next, Express Catering Limited. Okay, Express Catering Limited is a company that listed in 2017 at $1.50. Again, another Mayberry IPO, and we're not picking Mayberry IPOs. It just so happens that we've listed more than 50% of all junior market listings out there. So there may be 10 brokers, but there's just one broker, Mayberry, that seems to be doing most of the listings in the past. So Express listed, 2017, roughly 5-6 years ago, $1.50, stock now at $5. Let's look at, what's happened in the last 6 months. So for the 6 months ended November 2022, we see revenues up by 49% to $9.1 million. And we see that sort of just flowing straight through to the bottom line, similar as to what we heard with Paramount, 779, call it $780,000 profit. They report in US dollars. That's up by 219%. What I like about Express is their revenues are very closely linked to the passengers coming through the airport. And we see where they mention in their MD&A that there was a 42% increase in the number of passengers coming through the airport, and the average spend by those passengers are up 13% to roughly $8.50. So it's a great company in terms of their revenues are really tightly linked to traffic coming through the airport. We also see on December 15th that Minister Audley Shaw had the opening of the new expanded outlets that they've built for a cost of approximately $4 million. And we believe that this ultimately can help grow the business going forward by 30 to 40% at the revenue line. And as we can see, 40% growth in sales can often result in a 200% growth in profit. So while the current earnings per share based on the 12-year historical is 15 cents, and that translates into a 32 times PE, which is quite rich, I believe the market is perceiving the growth that is to come. And for sure, they were hit really hard by the pandemic. When we look on the next slide and you look at the last 12 quarters on the next slide, you can see that, throughout the pandemic, they essentially had, 4 quarters in a row where they had losses. And now what we have post-pandemic is 4 quarters in a row of them turning profitability. The last quarter, here you're seeing $130,000 profit. Q2 is traditionally their slowest quarter. That's the November period, November quarter, which is essentially September, October, November, which is sort of like back to school period. It's the slowest period. So we expect in the following quarter to come, December, January, February, to see great profitability. It was noted in Q2 2022 that the number of passengers now exceeded the 2019 Q2. So what we're seeing here is that passenger arrivals have now gotten back to pre-pandemic levels, and I expect for that to continue to grow, for there to be more traffic coming through the Sangster International Airport, and because of their expanded lounges and suites and offerings, including the Bob Marley restaurant and the guitar bar that they've just created, we're expecting to see 30 to 40% growth in sales, which means that they have the opportunity to grow this profitability substantially going forward. And it's hard to bet against tourism in Jamaica. And there are only a few stocks, Brandon, that give you tourism exposure, as in listed companies, Express being one, CPJ being one, and both great companies. Next slide, and I don't mean to compare them, they're very different animals, but both have good tourism exposure. Next slide sort of shows how the share price has been sort of relatively flat, up and down over the last 2 years, peaking at 694, low at 455. This stock trades with good volume. We did the volume analysis and saw that more than $500 million worth of this stock has traded in the last 12 months. So this is definitely the type of stock that you can buy, $20 million worth, $30 million worth. Yeah. It's widely held, trades with good volume. And I personally am going to predict over the next year to 2 years, as tourism continues to grow, there are 4,000 to 5,000 hotel rooms under construction. As the airport continues to expand and gets more traffic, we're going to see Express growing their revenues by 40 to 50% and potentially doubling their profitability. We've seen it just happen with the numbers we compare. I'm going to predict over the next 12 to 18 months, we're going to see it again. And I look forward to the very next quarter, which should be a strong quarter for them. So I think it's a great buy at $5. I think they have great potential. I think it's in the right space, tourism, good management team, good products. And so it's definitely a buy for me. Brandon, what are your thoughts?
I couldn't agree more, Dan. I mean, Express, as I said, direct exposure to tourism. And as we continue to expand our offerings in terms of the hotel rooms and even tourist attractions, that will just allow for more and more people to visit Jamaica, and when they're leaving, be able to partake in the different offerings of Express. I think something that I'm very excited for as well is that Mr. Ian there in an article last year spoke to the fact that this expansion and reconfiguration at the airport will allow them to access 100% of the departing passengers versus 70%, and that will also bode well in terms of increasing the amount of revenue that they're bringing in, and of course that will lead to increased profitability. So I'm very excited about the direction of Express. I love all the new offerings. It creates more diversity. Bento, the sushi place, the Bob Marley restaurant. Now you have more, upscale offerings that people, can partake in. And I really love how they've increased their offerings, and that will allow them to get a larger market share of the departing passengers because of now the versatility of what they're offering. So all positives for Express Catering moving forward. And as I said, Dan, that's a stock that I really love and have been recommending to my clients.
So thanks for that, Brandon. And folks, you heard it from us. That's our views on Express and Paramount. Brandon, what advice do you have for us today, or investor tip?
Thanks again, Dan. So my advice today is to just ignore the noise. I mean, many times, as investors, we get caught up with the new shiny investment. We're hearing people saying, recommending this, recommending that. And I want you to just calm down, focus on your work and your strategy, and what you want to do in terms of achieving in your investment journey. You don't want to get caught up with what everybody else is saying. You want to build out your own strategy, do your own sort of research, and then come to a decision. Obviously, you can also come to us at Mayberry, where we can advise you on what can best meet your goals. And even then, you need to guard yourself against listening to every Tom, Dick, and Harry about what else is out there, what new opportunities out there. You can really get caught up in missing out on significant returns if you keep jumping around to different opportunities as they come along. So please ignore the noise, focus, and execute.
Yeah, I appreciate that, Brandon, and I want to echo your sentiments. We have so many folks chasing IPOs, and I get the calls before the IPO is even open, before the prospectus is even out. Hey, Dan, what do you think of this one? And what do you think of that one? And I'm like, I can't give my advice until I've read the entire prospectus, which is what we're focused on. But in the meantime, there are great buy opportunities in the market today. And so, as I said earlier, we're more about spending time in the market than trying to time the market. So, for instance, NCP at $80 today, to me, is a no-brainer. That stock's going to jump by 50% in the next 18 months, or I'm going to change my name to whatever you guys want me to be renamed to. So I believe you need to look for the good medium to long-term opportunities. There are going to be 10 IPOs this year. You're going to be IPO tired. And the days of just buying stocks and flipping them and making 100%, I think are pretty much behind us.
And the market is showing that.
As we've just seen in the last
the diminishing returns in the last couple of IPOs.
So it's not going to be, any IPO is a great IPO, throw your money at it. You guys are going to have to think smarter, trust your advisors, get the advice, and invest accordingly. So thanks for that tip. I appreciate it. I agree wholeheartedly. Well, that's it for today's discussions. I'd like to thank our viewers for tuning in today, as always, and your support is always appreciated. I'd also like to thank my co-host, Brandon, for his invaluable contributions and insights.
Thanks
Brandon.
again, Dan. Thanks.
Appreciate it. If you're curious about updates on our virtual investor forum and investor updates, then find us on social media. We share our live stream dates and upcoming guests on our official social media pages. Give us a follow-up and stay on top of all things forum related. And don't forget to subscribe to our YouTube channel, Mayberry Investments Limited, and click the bell to receive all notifications. Well, folks, that's it. Keep safe, and remember, wise investor, slow and steady wins the race. Goodbye.